Assalamu alaikum, welcome to today's video. So today's video I'm going to discuss the revision kit questions on section A. Section A questions on section A. Right? Don't get confused because there are two section A. One section A is which is in the exam paper. You are going to get section A where you are going to get multiple choice questions. Okay? And the other section A is in your syllabus area, section A, which is the, as you can see, it's in bold, financial management function, which we have covered. We have completed. So you can check out all the 7 videos on this topic, financial management function. So since we have finished that, now we are going to attempt. That's my plan. Once I finish a syllabus area, then I started doing questions on that. Right. In this video, we are only going to do section A questions, not section B and C. The reason is because in section B and C, financial management function is mixed with financial management environment. So financial management environment, section B of your syllabus, we haven't covered it yet. We haven't finished it. So I thought it's better that we first finish the financial management environment also, and then we attempt section B and C questions both together. Okay. So, and there are 19 questions here. This is from your revision kit, from your Kaplan revision kit. As you can see, this is how you'll be presented. And this will be in CVE, computer based platform. Okay. You just have to know how to drop down, drag and drop, select, and type also. Sometimes you have to type in a small box. Okay, I will show you soon how to, from next week onwards my classes will be on computer based exam, both for AFM and financial management, how to solve questions in CBE platform. So that means I will not be teaching any more syllabus area for now until the day of your exam, until financial management and advanced financial management papers are over. Inshallah, after that, the other sections from section B to G, I'm going to cover after the June exam. That's for September exam I'm going to cover. Okay. So starting with the first question, in relation to the financial management of a company, which of the following provides the best definition of the firm's primary financial objective? By the word primary financial objective, you have to understand what is it. We all know it is the maximization of shareholders' wealth. So that's what we are going to see. A, growth in earnings. No. B, level of annual dividends. Maximize. No. C, maximize the wealth of ordinary shareholder. Yes. D, maximize level of annual profit. The others are also financial objective. Now you have to be very careful here. When you see growth in earnings, annual dividends, annual profit, A, B, and D, all, in fact, all of these 4 are primary objective. They are all financial objective. Okay. So you have to not get confused because they told the word primary. So how will you decide? The word primary will tell you that it is the maximization of shareholders' wealth. Right? So the correct answer is C. Okay. The other 3. What are they? Then what are they? They are secondary financial objective. Okay. So the other 3 basically they are used to achieve that primary financial objective, which is ultimately maximization of shareholders' wealth. For example, let's say your objective is to maximize annual profit. What happens at the end? The ultimate goal is if you maximize the annual profit, shareholders' wealth will increase in the long run. But the others are secondary. Okay, so the question asked primary. Do you see how important each word is in a question? If the word is not given primary, it's just given financial objective. Okay, this will make it very confusing. Okay, that's why each word matters a lot. Now coming to part second. Okay, question 2 is a different kind compared to question 1. Here you don't have to select one. Here you have to tick in the relevant box whether the objectives are financial or non-financial. Okay, so like this also you will get. The reason why I'm doing this revision kits questions are for you to show the varieties of questions and how a question can be tested so that you know the format of it. So statement 1, maximization of market share. Is it a financial or non-financial objective? Looking at the word market share, most of you will think it's a financial objective, right? If you're thinking it's a financial objective, then you are very wrong. It's not a financial objective, it's a non-financial objective. Because why? Please understand, because market share is a relative measure, right? It, it's not in itself a financial measure. Okay, so it's non-financial. Tick mark. Earnings growth. Earnings definitely it is financial. Okay, clicking in the relevant box. So you have to click, but I am ticking here. Okay, when you do it, you have to click in the relevant boxes. Sales revenue growth. Again, it's a financial objective. Achieving a target level of customer satisfaction, right? Customer satisfaction, non-financial. And the last one, achieving a target level of return on capital employed. So again, it's a financial. So 2, 3, and 5 are financial. The other two are non-financial. Okay, because customer satisfaction is a qualitative measure. So it's not financial. Coming to 3. Which 3 of the following are the main types of decision facing the finance? We know what are the 3. Investing, dividend, financing. So it is, the answer is B, C, and D. Let's see the out. Why others are out? Investment, income decision. We have never talked about income decision, right? Appraisal decision, no. Budget decision, no. Even though they are decisions, right? But they are not the main types. They have told you also. Wait, let me highlight it. 3 main types. So do you see, sometimes it's just not one, you have to pick more than one. This is another scenario. The third scenario is like this. You'll be asked. Okay. So this income decisions, okay. Let's talk about income decision. Income decisions are what? They are subdivisions of investment decision. Whatever you make in the investment decision, under that you will be making income decision, but that's not the main type. Okay. An appraisal decision is a subdivision of again investment decision only. And the budget decision. Budget decisions are not performed by financial manager. See the word. It's financial manager. So budget decision is not something which is done by financial manager. That is done by management accountant. This you have to understand. So this is how you learn. When you know something is right, please understand why another things are wrong. Because in future it will help you. Okay. Coming to number 4. Which 2 of the following are examples of financial objectives that a company might choose to pursue? Please underline the keywords. Number is 2. Examples of financial objective that a company might choose to pursue. Okay. So number A, dealing honestly and fairly with customers on all occasions. Definitely is not financial objective. B, provision of good working conditions in industrial relations. No, earning above a particular level of return on capital employed. Earning above a particular level of return on capital employed. This looks correct, okay? Particular level. We'll keep it here. And then environmentally friendly product. Protecting environmentally friendly product. No. The last one is restricting the level of gearing below a specified target level. So the answer is C and the answer is E. Because this talked about earning, which is financial, and this talked about gearing, which is again a financial level objective. Okay. So now come into the 5th one. The other objectives, if you see, they are non-financial. Okay. Whereas return on capital employed and gearing are financial. Value for money. We have studied in our last lecture, lecture 7, right? Where we studied non-profit organizations. So there we studied what is value for money and the 3 E's and all. So value for money is an important objective for not-for-profit organizations, right? Which of the following action is consistent with increasing value for money? Please note it is I'm sorry. It's supposed to be highlighted. Consistent. Increasing value for money. That means the following actions which you do have to increase the value for money. Okay? That's what it means. Which of the following actions? So it's just one. A. Using a cheaper source of goods and thereby decreasing the quality of not-for-profit organization services. Does it increase the value for money? Definitely not, because the quality is decreased. See, yes, it's a good thing that you're using cheaper source of goods, but then again the question comes, if the quality is reduced, then you are not increasing the value for money. You have to have the quality with reduction in cost. So definitely A is not the answer. B. Searching for ways to diversify the finance for not-for-profit organization. We haven't studied about finances and all in not-for-profit organizations, so B is not the answer. C. Decreasing waste in the provision of a service by the not-for-profit organization. Yes, C looks correct because you are decreasing waste. You are being efficient now. And D. Focusing on meeting the financial objectives. We all know that not-for-profit organization does not have financial objective. So the answer is C. It's clear from that, right? Remember the three E's. Value of money is related to economy, efficiency, and effectiveness. So economy means, first one, A, if you take A, it means it's talking about economic cost, right? They told, okay, keeping cost down, but without sacrificing the quality. But there, in A, they are decreasing the quality. That's why A is not the right answer. And when it's talking about efficiency, which is C, C is about efficiency, right? Effective resource utilization. So that's the right answer. And the last one is effectiveness, achieving the objective. But D, they're talking about financial objective for not-for-profit organizations. So that's why D is not correct. Coming to 6. Which of the following is these likely to fall within the financial management? Least likely to fall. Please understand the word least likely to fall. Sometimes most of the students go and pick up the most likely. That should not be the case. Least likely mean the not very close with the financial management. Something which is not so close with financial management. Okay. The dividend payment to shareholders increased. So definitely dividend payment to shareholders increase means that's a dividend decision. So dividend decision is something which is taken by financial manager. So A is most likely, right? So A is not the right answer. B. Funds are raised to finance an investment project. Again, it's an investment decision. Investment decision falls in the scope of financial management. Again, so B is not the answer. C. Surplus assets are sold off. It comes in the financial management. Okay. Because you can sold the surplus asset and use that finance either to invest, either to pay off the dividend, right? So D is the right answer. Non-executive director appointed to the remuneration committee. This is done something which is not in the hands of financial manager. It is least likely. Okay, because all the previous three A, B, and C they are the role of financial manager, but D is not. So the correct answer is D. I might be taking a longer time for you to explain. You might be telling that I could just finish, just provide the right answer and go ahead. But the reason is later you people will be asking me and messaging me, ma'am, I didn't understand this. How it's this answer? So I don't want that doubt to be there. Okay, it's better to understand it from day one itself. So later when you come, you don't get confused. Be very thorough with your concept. Number one. Second, when you do the questions, yes, you will be making mistakes initially, but then correct those mistakes. Know why something is wrong. It's not that you have to copy paste and make your answers perfect. You cannot be perfect. No one is perfect. So don't try to be perfect, but try to understand something. What? Okay, understanding is the key. 7. Indicate by clicking in the relevant boxes whether true or false. And mind you one thing, sometimes let's say here three statements are given. So I will explain with this example. Sometimes all the three statements could be true, sometimes all the three statements could be false. So when you are getting all true or all false, do not get confused or do not panic that something is wrong with my answer. Don't doubt yourself that false is there. So something must be true and some sentences might be false. Sometimes all might be true, right? So if you feel something is true, keep it true. Don't try to change your answer, thinking that okay, some statements needs to be true and some statements needs to be false. That's why true and false is there. No, sometimes all could be true or all could be false, or sometimes there's a mixture of both true and false. Okay. So financial management is concerned with the long-term raising of finance and allocation and control of resources. It's true. It's true. Management accounting, and for the students or for the ones who are viewing this video first time, if you haven't understood this, please go back to my other videos where I have explained you the concept. Section A is covered from it is there in my playlist. You can see all the 7 videos are there. Are 7 videos. So all the 7 videos, and then you can come and do these questions. Okay, so back to the question again. Management accounting is concerned with providing information from more day-to-day functions of control and decision making. So they're talking about management. So management is day-to-day control decisions only, right? So again, it's true. Financial accounting is concerned with providing information about historical results of past plans and decisions. It's true. If you see, all three are true. Next, 8. Which of the following tasks would typically be carried out by a member of financial management team? Okay. Evaluating the proposed expansion plan. It's an investment decision, right? When you have to evaluate the plan, expansion plans. So A looks at the right answer for now. I will stop at A. Don't be in a hurry. Don't judge. Read B, C, and D also. B. Review of overtime spending. Overtime spending is something to do with when you're having budgets at all. It is done by management accounting. Okay, so it's not for the financial manager. C. Depreciation of non-current assets. Depreciation of non-current asset is something which is done by the financial accountant. So again, this is not the part of financial management team. Apportioning overhead to unit cost. Management accountant. So the correct answer is A. Okay. Now, coming to 9. Which two? Sometimes students might click one also. So be very careful. That's why it's in capital letter. It's in bold, right? Which two of the following are examples of internal stakeholders in a firm? Remember, we have studied about stakeholders. Type of stakeholders. What are their contracts? So what are the two types of internal stakeholders? Company directors? Yes. Customer? No. Customer is outside. Supply is also outside. Employees? Yes. Employees work in the business. Finance providers? They are banks and the persons from whom you take loans. So they are outside. So the correct answer is company director and employees. Okay. The rest all customer, supplier, finance provider. What type of stakeholders are they? They are connected stakeholders. Connected. We studied 3 types: internal, connected, and external stakeholders. Okay. So what is the main purpose of corporate governance? So we have studied corporate governance. What is the main purpose of corporate governance? To separate ownership and management and control of organization? No. In fact, the separation of ownership and management was the reason why agency theory and all these things came into the place, right? B, maximize shareholder value? No. C, to facilitate effective management of organization and to make organizations more visibly accountable to a wider range of stakeholders. C looks correct. Let's read D also. Ensure that regulatory frameworks are adhered to. See, corporate governance is something voluntary. So regulatory framework comes when something is mandatory for you to do. So definitely D is not the answer. Okay, so C is the right answer. It's making your organization more accountable, more transparent. Okay, coming to 11. Agency problem is a driving force behind the growing importance attached to sound corporate governance. Can you see? Because of the agency problem, we are placing so much of importance to sound corporate governance. In this context, who are the agents? Is it customer? Is it the shareholder? Is it the manager? Is it the auditor? It's the manager. Yes. Shareholders are principals. Customers are not even there. Principal agent relationship. And auditors, not always. When you hire the auditor, but the main it is the manager's only. Okay. Number 12. Which two of the following statements are correct? Are correct. Two statements has to be correct. Number one, maximizing market share is an example of financial objective. Now, if we have done a question on this. Remember, question number 2, where we have to click whether it's a financial objective or non-financial objective. If you can remember, you can go back in the video on question number 2 and see. Market share, maximizing market share is a non-financial objective, so it's not correct. The first statement is not correct, so that cannot be an answer, because the question is which statements are correct. So 1 is out of the list. 2, shareholder wealth maximization is primary financial objective for a company listed on the stock exchange. Yes, it is the primary financial objective. So for now, 2 is the answer. 3, financial objectives should be quantitative so that the achievement can be measured. Is it so? Do you think? We'll read 4 also. The 3 E's are used as a performance measure to assess value for money in not-for-profit organizations. Till here it's correct. Statement is correct. The 3 E stands for economy, correct, efficiency, correct, environment. Here the statement goes wrong. That's why, my dear students, it's very important that you read the whole sentence until the full stop, the end. Because sometimes that one word at the end could change it, make it from correct to incorrect or incorrect to correct. So don't make this mistake. Don't be in so much of hurry and rush just to finish the paper somehow. Did you see the 4th statement? Until the efficiency, it was correct. All was true. But the moment environment was there, it became incorrect. So the correct answer is 2 and 3. This is what I wanted you to show. I could have, because I definitely know 3 is the right answer. What I could have done, I could have just marked 2 and 3 and I could have gone to the next question, but I stopped. Why? Because sometimes you never know, that 4th question might be even more correct. I want to show you. Okay. 13. Which two of the following are efficiency targets that a not-for-profit organization might put in place? And by the way, one more thing I want to announce is this question 1 to 19. Financial management function questions of section A. I have uploaded once, very previously, I don't remember exactly, I think 3-4 months back, I have uploaded it. And this is the second time I'm loading it again, but this time with understanding, better understanding. That time it was just having the right answer. This time I'm explaining in detail why it is right or what something is wrong. Okay. So 13, which of the two are efficiency targets for not-for-profit organizations might put in place? First it is 2 and then is efficiency target. Here they might give you economic also, they might give you effectiveness target also. What you have to care about is efficiency target. What is efficiency all about? It is about system, the process, utilizing the resources and all. Okay. So reduction of wastage of paper, yes. Wastage of paper. It's an efficiency. A is the answer. B, pay rates for staff of appropriate level of qualification. See, this pay rate for staff is not an efficiency. In fact, it's an economy, because staff comes in the economy part. Remember, cost and all. So B is not the answer. C, staff utilization. You're utilizing staff, efficiency again. Let's read D also, customer satisfaction rating. Customer satisfaction rating comes in which target? Effectiveness target. You will know whether you have achieved your objective or not by seeing how much your customer is satisfied, by the customer satisfaction rating. Okay. So let's go to the 14. Managerial reward scheme. I have done a video on this also. Managerial reward scheme. Why are we using managerial reward scheme? Because we have studied the agency theory. From there the agency problem comes. To solve that agency problem, we are putting in place Number one, managerial reward scheme. The other one was corporate governance. Okay. So here we are talking about managerial reward scheme. Should help ensure managers take decisions that are consistent with the objective of shareholders. Which three of the following are characteristics of carefully designed remuneration package? Three here. Okay, and it's carefully designed. Okay, carefully designed means it has to be very solid. So, A, linking reward to the changes in the shareholders' wealth. Is it? Yes, because ultimately you want to maximize shareholders' wealth. So if shareholders' wealth is maximized, your reward will maximize. That's what it means. So A is the right answer. B, matching of the manager's time horizon to shareholders time horizon. Definitely. This was also one of the thing which we studied. Possibility of manipulation by managers. So if managers can manipulate, then it's not a carefully designed package. So C is not the answer. D. Encourage for managers to adopt the same attitude to risk as shareholders. Yes, D is the answer. What about E? Motivational to primarily achieve short-term goals. It's not. It is not. Because carefully designed remuneration package means it should focus on both short and long-term goals, not just short-term goals. So coming to 15. Indicate by clicking the relevant boxes which of the following are typical criticisms of. So we have studied the criticisms of executive share option schemes also. Okay, criticism of this. I think 4 or 5 criticism we studied. So you should be able to quickly figure out which one is a criticism and which one is not a criticism. Okay. So when directors exercise their options, they tend to sell the shares almost immediately to cash in order to cash in on their profit. Right? Once they exercise the option, they can sell the shares so that they get the cash. So what happens? It's a criticism, right? If the share price falls when options has been awarded and options have no value, they cannot act as an incentive. Yes, definitely. Directors may distort the reported profits to protect the share price and value of the share option. It's a criticism. Right? To protect, because share price is very important when you're giving share option schemes to employees. So they want to protect that. How will they protect the share price? They will change the profit. They will change the profit. That means they will distort the profit. So that's a criticism. Okay. 16. The directors of Portico PLC has recently engaged a firm of consultants to negotiate standard terms of trade for one of its strategic business unit. This includes agreement by Portico PLC to pay a 5% penalty on any late invoice settlement. This policy is an illustration of the company's concerns for which major stakeholder? Who is a major stakeholder here? Read it. If you're not understanding it first, read it again and again. Is it lender? Is it supplier? Is it customer? Is it trade union? Right? This should be something which is very easy for you to identify. It is definitely supplier. Right? It's not customer, it's not lender, it's not trade unions. Why? How do you know supplier? Because invoices are received from supplier, not any of it's not received by lender or customer trade union. It is received by supplier only, right? You are receiving invoice and all. So even a little bit of common sense also will help you to answer this. You don't need to study so much of stakeholders and all. So 17, 18 and 19 and then we are over. So 17, under the terms of UK Corporate Governance Code, what are the only type of directors permitted to sit on a company's audit committee? You definitely we didn't study the audit committee, right? In the financial management section A, but from a previous study, you should be able to know which type of directors are permitted to sit on audit committee. Independent non-executive director, executive director, or directors with financial experience. It is independent non-executive director. Okay, that's the only type of director which is permitted to sit on the company's audit committee. They have to be. Not all of them should have, but at least one or two should be having a financial experience, right? And definitely executive director does not come there. All has to be non-executive director, but they have to be independent. All of them have to be independent non-executive director, not just non-executive director. Because what is the role of the auditor? To audit, right? So if they are not independent, then the auditor's report which they are going to submit will not be reliable. We cannot trust on it. That's why they need to be independent. 18. Which of the following would you expect to be the responsibility of the financial management? Is it producing annual account? No, because it is a job of the financial accountant. Producing monthly management account? No, because it is a role of the management accountant. Advising on investment in non-current assets? Yes, because investing in non-current assets, this is like an investment decision. C. Deciding the pay rate for staff. It is again the job of the management accountant. So C is the right answer. Okay, it's an investment decision. In fact, this is one of the three. Remember that one of the three main key decisions of the financial manager: investing, financing, and dividend. So this is an investment decision. And finally, question number 19. Indicate by clicking in the relevant boxes below which of the following statements are true or false. Value for money is usually taken to mean economic efficiency and engagement. False. It is economic efficiency and effectiveness. Common dividend means the buyer of the shares is entitled to receive the dividend shortly to be paid. Definitely from your financial accountant, right? FA paper, F3 paper, you must have learned what is cum dividend or ex dividend. But if you haven't, if F9 is your first paper, then cum dividend. Okay, cum dividend means the buyer of the shares is entitled to receive the dividend shortly to be paid. It's true. That's what it means. There are two types. One is ex dividend, one is cum dividend. Okay, or cum dividend. So the dividend payout ratio. Now ratio will also come here. Okay, we have studied a ratio. One whole lecture was on ratio. I think it was lecture 6. So the dividend payout ratio compares the dividend per share with the market price per share. To know this, whether this is true or false, you have to know the formula for dividend payout ratio. This is why I always tell you, you have to memorize the ratios. Okay, it is false. It is false. Make sure that you know what is the correct ratio. Okay, next. If in case you forgot, let's say you forgot and you're not able to decide between true and false, don't take so much of time to get it right or make it perfect. That case, just make a best guess and move ahead with your next questions and all. That's the most valuable advice I could give to you. Don't get stuck anywhere in any one question, because later on you have section C questions and B questions where you have to write. It's long questions. Okay, agency problem is shareholder wealth is not being maximized. Yes, definitely. Because if you're having an agency problem, okay, the agent and principal, they're having issues. How can you maximize shareholder wealth? Somewhere down the line, shareholder wealth will not be maximized because they both have their own self-interest. But the ultimate interest is shareholder wealth maximization. That is the objective of shareholder, not the agent, not the manager. That's why maximization of shareholder wealth is not possible when agency problem is there. With this, I have finished the section A questions on financial management function. The next is financial management environment. So I haven't covered the syllabus area before that. So that's why after we finish the syllabus, then I'm going to do the questions on this. As you can see, for an example, you can go through this one question, question 20. You can see it talks about fiscal policies. So you can have some idea what are we going to discuss in the financial management environment. All fiscal policy, monetary policy, tax rate, government spending, interest rate, inflation, all those things. Okay. So that's it. Hope this video is useful for you, and don't forget to share this video among your friends who are having issues, who does not have access to a textbook or a revision kit, who cannot afford. Please help them. That's my humble request. You have nothing to lose by helping others. In fact, you are the one who will be gaining. So let's help everyone in this COVID situation. Help everyone to pass. That should be our ultimate goal. So that's it. Take care and see you in my next video.